Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to look at the third report of this year, and as always we're going to start off with the changes in commercials positions. So let's start with the natural gas, where we had a huge 28% change in commercials positions, 30 in large speculators. If you look at the chart, you can see these changes are the largest changes in the past 1 year, past 52 weeks to be precise. It is a bearish COT change signal, and it's coming when prices are actually near their highs. So this may actually be an effective signal. If so, we should expect it to be effective early next week. The 5 years chart will give us a little bit of more information about the COT Extreme situation, and let's have a look at the most bullish and most bearish extremes on this 5 years chart, and you can see that we're more or less in between. The last major extreme was this relatively large bullish one that, as you can see, has been able to push prices higher from this bottom. Whether or not we've reached a bearish point is a big question, of course. It's not that obvious from the COT report, so we may actually see further rise in the market. The next market is the S&P 500, where we have this 22% change in commercials positions. You can see that change over there, which is larger than average, no question, but you can see we have seen many times similar or even larger changes in the past. And to be quite honest, I would say these bearish change signals were not always that effective if you look at the chart, so caution is advised. I would suggest to be very careful with these bearish COT change signals in such a market circumstance. The extreme is definitely closer to its bearish side, although it is not all time. And you can see that we've been at such areas quite some time in the past without any reasonable reaction from the market. So again, caution is advised. The next market is the sugar market. Here we have a bullish COT change signal, a 17% change in commercials positions and 18 in large speculators. We have large speculators being just net short now. They were net long a week ago. As you can see, they're moving back and forth from net long to net short. If we open the 5 years chart, you can see everything on a wider perspective and see that we're actually much closer to the bullish extreme side of the market. But again, carefulness would be a good way to approach this market, because in the past roughly 6 months, you can see we were more or less at such levels, but the market did not really change its course. You can see that from second half of 2016 we're in this bear market in sugar, and whether or not this will change, well, it's not a question. It will eventually, but of course when is the big question here. So one thing's for sure, the bullish extreme is there, and we can say from the report that it's suggesting a move, a change in the market trend. Okay, let's move on and have a look at large speculators COT Extreme opening crude oil, which is on top of our list with an all-time COT Extreme. And of course, jumping to the 5 years chart to see everything on a wider perspective. Here we go. So there's that all-time extreme, also in commercials. As I have told you before many times in the past weeks, we have to be aware of the fact that these all-time COT Extreme are able to be in the market for many weeks or even months before we see a reaction from the market. So what I can say is there's an unquestionable huge stress in the market. Large speculators are heavily long. They're around 700,000 contracts net long level, and of course eventually this is going to end, and when it does, we're going to be experiencing a decline in the market. The next market is the British pound with 174 report extreme in large speculators. You can see that extreme over there. This was roughly back over here in 2014, which if we go a little bit further back, which was a greater extreme, you can see that was the top on this 5 years chart over there. That was a beautiful bearish extreme, pushing prices down, And now we've reached again a bearish extreme, maybe not as large, but we should be prepared for the end. I mean, the end of this this rally, which started more or less early 2017. You can see that bullish COT Extreme over there, the largest one. But of course, there were signs earlier that there may be a change in this downwards trend. So eventually that happened, and as it did, stress levels, the bullish stress levels in the market decreased, and now we have an increase in the bearish stress of the British pound. The last market for the review is lumber. We have a 72 report extreme in large speculators and 255 report extreme in commercials. Huge extreme. It is a bearish COT extreme. Bearish COT extreme when prices are at their highs. So this could be a good opportunity, but of course you always have to do your research and see what happened in the past. You can see we had a similar bearish extreme back over here in 2013 that was able to push prices lower. There was another bearish extreme at the end of 2013. It wasn't that clear, as you can see, but it was able to push prices back down. And you can see all these relative bearish extremes able to end little rallies, bounces in the market. So it's just another proof of how effective these bearish COT extreme signals are. Okay, that was all for this review. I hope you enjoyed it. And a remark at the end, please, if you haven't checked our new service, futurestradingguides.com, do so. We have a 3-day free trial period for you, and a lot of useful information as well on 57 future markets. Okay, I hope you enjoyed this review. Have a great weekend. Take care. Goodbye.